Hello, YouTubers. This is Fitzky. Today we're actually going to talk about taxes. Dreaded taxes that you owe the IRS when you make profit. And it shouldn't be income tax, but income taxes as well on some of the income you made. So if you guys were fortunate to get into Bitcoin and cryptocurrencies early on in the game, you can see today, November 22nd, it's at $81.89, so just under $8,200. If you got in this year, or at the beginning of this year, or last year, you got in $1,000. Depending on how much you got, you could have huge capital gains. And I want you guys to be in the system for a long time. So pay your taxes. So let's get into the presentation. So this is mainly for U.S. citizens, and it does not matter where you live. So you could move to Costa Rica, Panama, Mexico. If you are a U.S. citizen, you still owe taxes on income and capital gains. So over this presentation, we're going to go over what is a taxable event. How do you calculate capital gains? And my recommendation is don't listen to me. I'm not a CPA, although I could play one on TV. I want you to find somebody that is a tax professional who understands crypto coins and the tax implications in your situation. So let's talk about it. First, how does the IRS look at crypto coins and specifically Bitcoins? There's an IRS notice out there from 2014 called 2014-21 where it states that Bitcoins are considered property, not currency, not a commodity, not an investment like stocks, but property. And property is handled completely different. So if you have property, you need to be aware of 3 important actionable timeline events for any of the property that you own. It's when did you acquire the property and the appreciation that you've had while holding said property, and then when you dispose of this property. So you're going to have to keep accurate records and know that when you exchange the property, that's going to become a taxable event. And you're going to have some capital income, and you're going to owe capital gains tax on that capital income. The good news is, for those that buy and hold and use Bitcoin and other cryptocurrency as a store value, this buying and holding is not a taxable event. You will only owe taxes on the capital gains when you realize capital income, and that will only happen when you sell. There are other taxable events. We've talked about when you sell those coins for US dollars. And what's still iffy, which is why you need to hire a tax professional, but in October, November of 2017, when you trade coins for other coins that aren't like coins, meaning when you trade Bitcoins for Ether coins, that is a taxable event. If you buy goods or services, like the guy who bought 2 pizzas for 10,000 Bitcoins, that is a taxable event. If you make any donation in coins to a charity, you get to write that off, but that is a taxable event. In that one, it's a positive taxable event, and you're feeling good because you're doing good things. If you're one of the ones who mine coins or in a mining pool, and you get coins for the mining efforts, that's a taxable event, and that's income. If you sell anything and you receive payments in coins, that is a taxable event. If you have coins stolen, that affects your tax, and it does change your capital gains. It's a capital loss. So you can write that off against your capital gains, but you don't get 100% credit for it. We'll explain that. How to calculate your capital gains. The first part is, what's your cost basis? What did you buy the coins for? So if you bought one Bitcoin at $1,000, what you paid for them is $1,000. If you had expenses or fees to buy that, let's say Coinbase or Gemini or wherever you bought those Bitcoins charged you $1, then your cost basis goes down because you can take out those fees. So your cost basis for that one Bitcoin was only $999. So you want to make sure you keep up with all the expenses of storing, securing, purchasing, transferring. All those fees you've been paying, you can write off against your cost basis. So capital gains minus the cost basis equals your profit. And you're going to pay taxes on that profit. If you sold or spent coins for less than what you paid, you're going to have a capital loss. And you take your losses out of your gains, you only pay taxes on the income, which is the capital gains. We talked about it earlier, like-kind exchanges. If you buy Ethereum or ETH with your Bitcoins, it is not taxable as long as you pass along the cost basis. So your cost basis gets transferred into the new coin, the new property, and then when you sell that, you've got to do that calculation. But remember, since this is property, if you spend your Bitcoin on anything, that is a taxable event. If you buy a stick of gum, groceries, jewelry, anything with your property, that is a taxable event that's going to affect your tax situation. The other thing we talked about earlier, if you people are mining, you've bought the equipment, it's humming in your attic or in your garage, and you're mining coins, or like most of you that mine are in mining pools, you're going to invest in a mining pool, you're going to get a certain percentage of the income from that. So that's going to be taxed as income because you're making an income in Bitcoin and that has a dollar value. And you're going to have to record whatever that value of the coin was, the date that you received it. You're going to have to keep records. If your exchanges and your mining pools don't keep those records, you need to start keeping that on a spreadsheet. And if you have a mining with other coins, altcoins, you've got to keep those accurate records, whether you tie that to Bitcoins or not. You're going to have to tie it to the US dollar at that rate, at that day, so you can figure out your cost values, your cost basis to come up with your capital gains. And I said it earlier, but make sure you're dealing with somebody that your online wallet or your online exchange or your coin mining folks, that they can provide you with a 1099. I would ask who can, and as of today, or October, when I asked, none of them are going to provide you with a 1099. So this is completely up to you. For you to fill out your Schedule D to calculate your capital gains, you're going to have to use these numbers in these spreadsheets. The next one is Form 8949. It's called Sales and Other Dispositions of Capital Assets. And as property, that's what this is. So don't get overwhelmed with this. We're making money. Be happy that you get to pay taxes on capital gains and not losses. So here's some resources. There's Investopedia, there's Bitcoin.tax, and of course, hire a CPA that knows crypto. But let's look at that on these resources. Investopedia is a great website about investments, strategies, other resources. But a new one that's out there, if you haven't seen it, is Bitcoin.tax. That's going to explain in detail some of what I went into and even more about the capital gains and income and how to do it for the altcoins, right? Not just Bitcoin, but Ethereum, Ripple, all the other digital currencies and cryptocurrencies. There's even reports, calculations. This is a great place to go. Get your spreadsheets, start filling them out, and keep up with your taxes so we can keep this ecosystem going. Read the notes below me, because once you're making money with Bitcoin, I'm going to show you how to turn it into BitConnect interest payments every day. So sign up under me, get to use all my tools, resources, calculators, and let's make lots of money.